Rest of the world will buy more of our things if the dollar goes down, but if they have to pay high tariffs on our stuff, how is that going to work? Are you talking about the rest of how the if the rest of the world is going to have to pay high tariffs? Well, that all depends on what other countries do. See, other countries are not going to want to keep high tariffs on our stuff. They're not going to want to pay more. Do you think people that live in Japan are going to want to pay more for American products? Do you think they'd rather have Chinese products? I don't think so. So these other countries are going to drop their tariffs on us. So we will drop it on them. That is the first part of the negotiation. So, and the other part of it is, Zlatko, the other part of it is, we will, rather than be buying things from China or Japan or the UK, if they frickin' make anything, watch what you say, they'll be buying American-made stuff. And if they're buying American-made stuff, that those prices will come down. So that is sort of the thought. I've been holding a lot of NVIDIA shares for a while. What do you think about selling some covered calls a little out of the money, buying some long calls a little further out of the money to generate some cash while having some potential upside? Yeah, so like if you are a believer in NVIDIA, which I am not, but if you are, I would suggest you collar it. So a collar would be, and Cheryl's done quite a bit of this, but you could, if you have 100 shares or more, for every 100 shares you have, you can sell a covered call, one covered call. And as long as price doesn't head above that, you get to keep that premium. You take that premium. You don't buy long-term calls out of the money to generate cash. No, 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 no. What you do is you buy out of the money puts so that if price continues to drop, you're making money on the puts, which helps mitigate your loss on the stock. Perfect balance. Do you understand that? So if you've got NVIDIA, let's say you have 1,000 shares of NVIDIA. Well, you divide by 100. That means you can sell 10 calls. So maybe you sell the 105s. Cheryl, what would that be? That would be good, right, Cheryl? Sell the 105 calls for next Friday. Let's just see what that looks like. Look at that. You could sell the 105s. You could sell the 104s. I'd sell the 104s personally. Get $2. That's awesome. Right. So check this out. You got 1,000 shares of NVIDIA. So you can sell 10 covered calls, which means you can get $2. That's $200 times 10, which is $2,000. As long as price stays below 104, which I believe it will, you get to the calls expire worthless, and you get to keep the $2,000. So what do you do with the $2,000? Well, you could put it in your freaking pocket if you want, or what you could do is you go out to say May, and you buy 10. I guess you could buy these, but I guess you could buy these here. So you take that $2,000 and you buy 10 of these. Costs you a little more. See how that works? So you got your stock, you buy the cover, you sell the covered calls, you take that money and you buy the same number, bang, right there. Now, if you didn't want to have to spend that, you could go to here if you wanted to, right here, buy these. So you could buy 10 of the 85 puts for, say, a few weeks out, right? These are totally paid for. In fact, you'd have $560 of cash left over, right? Take your significant other out for steak. a nice bottle of Barolo. If you're smart, you'll start with an old fashioned with some 20-year-old rye or something, right, Michael? Michael's with me on that. No, it does not assume a very bearish outlook and continued crash of Nvidia. No, all it's saying is, if Nvidia is falling, if Nvidia is in trouble, and you have a good amount of the stock that you do not want to let go of because you think at some point it's going to go higher, then pick a number where you most likely don't think Nvidia is going to get above. I don't think it gets above 104 by next Friday. If you do, then sell the 105 calls instead. Sell the 106 calls for 80 cents and bring in $800. And then from that $800, what do? No? You buy 10 of these. You buy the $80 puts and buy 10 of those, right? That's called a collar strategy. Very sophisticated, very smart. Any of you that have over 100 shares of stock where the chart is bearish, but you don't want to dump the stock. If anything, you want to buy more of the stock. All right, good. Buy more of the stock, but hedge your position with a collar. Wow, we're covering a lot of stuff. Let me go back and make sure I got the questions. So nice to see some of your names in here participating. I'm sorry that I didn't say hello to you. You guys know who you are. But hello, nice to see so many of you in the room tonight. What about Lilly? Yeah, so what do you want to do with Lilly? So Lilly, it's in the news. Great, they're up 15%. What do you want to do? You want to jump on the bandwagon of Lilly? You want to buy it? You want to short it? So here's the thing with Lilly. Can I buy this here right now? Any of you that know the Trade With Me Now methodology of buying gap ups, you know that we cannot buy it here because there's a good chance that it closes the gap. So I'm not going to buy it now. All right, well then short it. Well, there's a good chance that this is a gap and go and just keeps going. So what do? Nothing. You got to wait 3 days. 1, 2, 3. If it holds this level, 1, 2, 3, then buy. You got to wait 3 days. That's my 3-day rule. I've had it for 5 years. People have copied me out there in the market. I'm sure you've heard them. If you look at my earnings course, that little supplement, we talk about this. Not only that, I built an indicator years ago called the earnings indicator, and it's right here. Right here. Not only that, I show you the statistics of how well it does post. And what is this post A for? Post this. This is over the last four, and obviously not populating at the moment, but over the last 4 earnings calls, how does this thing do what? 3 days after, and it gives you a percentage. In fact, if I pulled up can I do that? How do I do that? I think it's just a study. I think it's a show me. It's not an indicator. It's not a paint bar. I think it's a show me. Maybe it's here. Yep, there it is. So this is the earnings indicator. You can put it on any chart. See how I just put it on Lilly? And it's after market here. So I'm obviously not getting all of the data that I normally would get. But this is the earnings indicator. Check it out. Look at this. Next earnings tells you the earnings date. May, why does it say May 1st? Before the market opens. 14 days. And then it gives you the stats here, and it lists the stats here. See if I can do, let's do Meta and just see what comes up. See if it'll populate it. Yeah, it's not going to populate it now, unfortunately. During market hours, it will. This will tell you like when the last. Let me see if I put it on daily. It might make a difference. Let's see. Yeah, there we go. I just need to put it on daily. Oh, so let me put it back to Lily then. Have you guys seen this before? Have you seen the earnings indicator? Are you like insane that you don't have one? There we go. Look at this. So post earnings right here. This means how did it do 3 days after? The run into earnings is the 10 days trading, 15 trading days leading up to earnings. This on every single chart. Here, this is what the earnings indicator looks like on a daily. Here's the earnings calls right here. Boom, boom. These are earnings. Boom. When you get the X, see this X right here? It means you're 10 days away from earnings. Or not 10, 15, 15. No, 10 trading days from earnings. Yeah, 10 days from earnings. And this blue red box here, that's 30 days prior to earnings. And then this gives you all the stats over the last, 5, 6, 7, 8 earnings calls. How have we done run into earnings? That's the 15 days leading up. Post earnings, how has it done? And it'll give you stats right here. Oh, actually, it's giving me all the stats here. So here, the post earnings, it'll give you right here, half. So over the last 4 earnings, 50-50. It's gray means 50-50. That means 2 of them were up, 2 of them were down. This is the 3 days after earnings, 0.25%. Not that encouraging. But if you look at this, over the last, it says 8. Out of the last 8 earnings reports, 6 of them have been a positive move, averaging 4.7% move in the 3 to 4 days after earnings. That's my 3-day rule. Got it right here. So there's, we got to wait for the earnings call and see, but it's the way I treat the gap ups in the same way. So this is just phenomenal. So this is the earnings indicator in all of its glory. And then you can load it. Oops. Let me put this back to wherever the heck it was. Then you can load it into the radar screen and have all that data here. Say here's blank or whatever. It takes time to populate all that information. But right here, I tell you the next time the earnings call is it before the market open or after the market close? How many days? And if you want to see in your watch list, like you want to see when the next earnings things, you just double click on here, days, and it'll put it in order. It's really cool. So if you have Legacy Elite, you have it. This is going to screw up all my charts. So I'm going to just edit study. We'll take the earnings data here and just turn it off. And now everything is right with the universe again. Change this to 15 minute. Okay, back to questions. Costco, you want to look at Costco. Love the stock. Super healthy looking stock right here. Under normal conditions, Yeah, Lily has a new weight loss. I think that was the reason for the spike was the new drug. But I don't trade that. That's not like tradable event. It's not something I trade. But Costco, if you're looking at this chart on the weekly, you're not overbought, and you've got plenty of room between where you are now and the upper Bollinger Band. So there's that. That's 1,000. 1,090. Yeah. So certainly you got up to about here. The only problem with this is, are we in a bullish market that would support this move? The markets crack and we don't get a deal in China with China, and there's some economic data that comes out, or Powell opens his mouth, or somebody opens his mouth, or Elon yells at Navarro again, or whatever it is, right? You're going to see the whole market go, and so does this. So because we have such a volatile market, put those on the back burner for now. You could be right, you could be wrong, but you'll have such better success over the next few months while they're tinkering around. Trade IWM, SPY. If you want to short NVIDIA, Apple's certainly coming up next. Meta looks like death, right? JP Morgan. Trade these stocks. You want to hedge FXI, China stocks, in case China cuts a deal. FXI is going to go through the roof. Stick with what's going on right here. Tesla, you can short if you want. They probably have earnings coming up. They're probably going to go down, but who knows? Stick with the semiconductors, the AMDs and Avgos of the world. Stick with this rather than poking your nose around in the stock lists trying to find the right stock. Because if the market goes down, which it could, it drags everything down. So to pick and choose a winner is going to be a real tough thing to do. Does that make sense? For now.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.